The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the April 20th magnificent Monday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and I hope that you're off to a great start of your day. Let's make sure that you and I, we do everything we can to have an extraordinary day, an extraordinary week. And let's always remember what's talked about is a dream, what's envisioned. Yeah, it's darn right exciting. Of course, what's planned becomes possible, but what's scheduled is real. And I want to really thank you for scheduling your time with me here this morning. I'm honored by your presence. I'm absolutely here to serve you. Feel free to pick up that phone, dial on in at 877-927-6648. Of course, internationally, you can reach out to us at 727-445-1044. Remember, if you've got a question, well, somebody else, in fact, many other people probably have that exact same question. So go ahead, call in for them out there. Random act of kindness, that's the way to kickstart your day on this magical Monday. Welcome to the Hotel California Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got Dow trading up 219 points at 18,045. S&P up 18, trading at 2,099. Russell 2000 up 7 points. The composite up 40, trading at 49.72. The DAX is up a little over 200 points. The FTSE's up 53. Gold is back $6. Silver's down 25 cents. I owe you spending some time and going to take a look at that, as well as the soft currencies out there. I didn't do that during the last hour, so we'll make sure that we get that done here this hour. Google's lead the charge up $9 and change. Looks like Google has given us a Gartley buy confirmation today. Just need some additional follow through tomorrow. Of course, the close is going to be important out there. What do I mean by a Gartley buy pattern? Well, it's done an A to B equals CD to the downside. It did a 1 to 1.618, A to B equals CD to the downside. And in doing so, it also made a 0.618 retracement level. If we take a look at that, just to show you that pattern out here, now we'll go take a look at the stock indices. I'll give you an idea of what the market is doing, what it needs to do today. Here's your 0.618 retracement, that projection there from low to high, low being January 12th, high being out here on March the 5th, 0.618 number, 522.07. The actual low on Friday was 521.01. Volume on Friday, not a real big deal, 2.1 million shares. That 2.1 million shares was going into 5.5 million shares from January 30th out there. So you're coming back into a supply area that is loaded with bulls out there. You make your 1 to 1.618, A to B equals CD to the downside. Let me show you what that looks like out here. That pattern, your A was up here on March the 5th. Your B point was the low on March 13th. Your C point out here on March 24th. Come on, there we go. 1 to 1.618, price projection 520.08. Price actually got down to 521.01. Completes that pattern. Nice big bull sash candle in place here this morning. That is a confirmation that Google wants to trade higher. Where to? Well, can be one of any 5 different levels. You're looking the first place, first target 542.75, second target 556, third target 563, fourth target 577. If it clears 577 at any point in time with more than 1.3 million shares, it'll actually set up an A to B equals CD to the upside. Oops, that becomes target number 5. And target number 5, that would be a doozy of a price projection out here. That would give you a price projection of somewhere around 635.94. None of that is out of the question, but you got to take things one step at a time. That first step, 542.75, that is inside of Google. Now let's go take a look at. So let me first start off and say, okay, what is the market doing as we speak right now? First off, the easy way to do this, I did this during the first show, and we're going to go take a look at actually the intraday time period out here. That's the take a look at the ES Mini. So the ES Mini, just to tell you what it has done here during that first hour of trade, during the first half hour, 9:30 to 10 actually. The ES Mini, the futures contract, was able to break above this descending price channel and do it with conviction. Now, The target on there, my target that I had, first target was 2,096. We haven't hit that exactly. We got up to a price high of 2,094.25. Nothing bearish or anything like that as we're taking a look at it. If we get above, if the ES mini gets above 2,099 and a quarter, does with any kind of conviction stays above that level, then the move to the downside is kaput. It's over. It's done with. It was overplayed on Friday. Otherwise, that becomes an area of resistance to look at. So we'd be watching for that. What we'll also be watching on the on the 30-minute chart here for the ES Mini is right now it is still in that sixth level, sixth of potential 7 waves to, in this case here, to the upside. Now, the earliest that chart pattern could form would be, let's see, 10:30 to 11 and up 11. So it would be about noontime as Basel, because that would be the earliest that chart pattern could form out there. But you're sometimes level 6 acts as a resistance area. We'll see if it's going to get to that 7th level out there, whether it can clear 2,099 and a quarter. That's on the ES Mini. That's the place where if you're looking to sell the market, that's the place where you'd like to see the actual bounce move to. But then what you want to do is, if you were going to try to take that side of the trade here, what you need to do is you need to understand what's going on inside the summation index. If we take a look at the New York Stock Exchange, what it did on Friday was it created an island reversal top. We're going to take a look at that. It has failed because we saw price here this morning get up to a high so far of 11,140. The actual low of that island was at 11,134. So passengers on that cruise ship, the USS I'm moving higher, went and picked up passengers off of that island. So nobody is stranded at that island top. But we'll take a look at what that means. Hopefully we'll take a look at that during the next hour. Now, what's really most important is whether or not this price oscillator can stay above zero by the end of the trading session. Let me see here. I just happen to have it written down off to the side on my other computer. So I thought I did. I do. I know I do. 1,280 net advancing issues is what would be needed today in order for the bulls to take control of the New York Stock Exchange. 1471 is where they're at right now. It's all about the end of the day. I do mean 4 p.m. end of the day out there. If, on the other hand, New York Stock Exchange sells off just a bit, rejects this zero line out here, then it's really even if the market finishes up, it's truly the sellers that still are in control. I know that seems hard to believe out there, but you don't have to believe me. I'm just telling you my read on what that would mean out there. A rejection of that line says that sellers still in control. It doesn't matter how much the New York Stock Exchange finishes the upside. That's the message there. Of course, we like to see instead of a triple R, such as what China did with their reserve requirements last night, we like to see a triple P. That's the price oscillators each being below zero. Right now, if we take a look at the NASDAQ composite, even with it being up, it's price oscillators at a minus 0.3. It's all about the end of the day reading out here. Hey, if the composite can't get up above that level, still tells you sellers are in control of the composite. We have a lot of time left in the trading session, but at least if I can give you what it is that you need to look at both from the bullish side and the bearish side, that will be helpful. Now, the case of the Dow 30 stocks out here, I don't give as much as I'd like to see it participate and join along with the gang, Spanky in our gang, but sometimes it does its own thing. Its price oscillator is back above the zero line for sure. We'll see if that area holds. Again, we'll know at 4 o'clock, and I'll be able to take a look at that with you at 4 o'clock today, filling in for Tom while he is gone for the day. So we'll be able to look at that as the 4 o'clock bell gong strikes out there. As far as the VIX index, she's traveling well below the 50-day exponential moving average out there. Anytime it's below that, markets do one of two things: move sideways to slightly to higher out here. That 50-day exponential moving average is priced at 1478 at the moment. It's trading. VIX is traded at 1332. All right, so that sets up our. I hope that sets up our day and what it is that you should be looking for. So my work's done. Your work is done. It's Monday. Let's go party. Let's go. How many people say, "Hey, it's Monday morning at 10:17. Let's go get this party going here." All right. Well, we're going to get the party going by going and taking a look at the ETF structures out here. Let's start out by taking a look at the QQQ series ETF. What do we know about it and Friday's action out here? Well, what we know about it and Friday's action was it was unable to bust out the lows. It was doing it with light volume. So if we take a look at the Qs out here at swing point, is March the 26th, 47.8 million shares traded hands on that special day. On Friday being a special day, only 46 million shares. Test the top of that swing point, rejects it. That was a rejection on price and volume of that all-important March 26th swing point out there. Volume today to the upside, 7.1 million shares. Again, you got the gap out here, the bottom of which is 107.40. Here's how we play this deal. We just come back and take a look at the larger composite, NASDAQ composite, see what its price oscillator is doing at the end of the day. Was not enough volume to push down and say that, hey, it wanted to go test that swing point. Quite frankly, if it had moved down with volume, big volume on Friday, that actually would have signaled the low out here. But at this stage, what we know is that the Qs got into that swing point, rejected it with both price and volume. Probably sets up, well, if the composite gets above zero, it'll set up another run for the highs out here, which I would have to say the high here from March the 20th, more likely March the 2nd out there. That's what's going on inside of the Qs. If I pull this back further, I say I've got some yellow lines on my screen. Let's just take a look. Maybe this gives me, I don't recall what's out here, but let's go look. Okay. We're looking at a rising price channel. Okay, so here's the rising price channel. Here we go. Okay, perfect. This is the rising price channel inside of the QQQ series since March of 09 as we take a look at it. So since March of 09, you can see nice rising price channel out here. Still, in that rising price channel out there. Price finding resistance at the top of that channel line out there. Composite, price oscillator above zero. Qs up to the top again. This is Steve Rhodes with TFNN. We'll be right back.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 209. S&P is up 17. Did you see that Super Mario Draghi over the weekend? He said, just try and short the euro out there. He said something to the effect of that. Well, apparently that was a challenge, and apparently somebody said, yeah, well, that's exactly what it is that we're going to do. Thanks for the warning out there. Hey, let's go out to Costa Rica to our man, K. Rico. Buenos dias, K. Rico. How you doing this morning?
Buenos dias. Can you hear me okay, first of all?
Can hear you just fine. Thanks. So now you were a couple hours behind us, I think, aren't you?
Yeah, it's really killing me, too.
Hey, come on. It's 8:30 in the morning. It's probably in the 70s out there. I mean, life is good.
Yeah, no, it's very pleasant weather. We had a little shake the other day, but nothing to it. But going for fresh fruits and vegetables is the most beautiful thing I can ever. I just appreciate every morning going for new, fresh fruits and vegetables for the day.
Oh, boy, that sounds good. That sounds good out there. What's in season? What's in season in Costa Rica?
Oh, gosh, we got watermelon. We got papaya. We've got stuff I can't even pronounce, so I don't want to butcher it on the air.
Okay,
but
all right.
There's stuff that has the most delicate delicacies when they go down your back of your throat and your flavor taste buds kick in and start recognizing or asking, what is that? I want more.
Oh, that's great. That's right. That's very cool. Very cool. Hey, you want to take a look at the Euro-Japanese yen. Now, I know you're not using either of those currency pairs to purchase your fruits and vegetables in Costa Rica, but tell me how I can help you here.
Okay, here's my situation. I have on my one monitor, I have the ES Mini, 1 minute. I have the New York Stock Exchange 1 minute, and I have the YM 1 minute, and I have the Euro Japanese 1 minute, and I have the TF. Now, you're a big proponent. You like following the Euro Japanese as a kind of sort of indicator. I don't know how strong, but I'll just say kind of sort of an indicator. Today it's down, yet the markets are up. And as I look at the Euro-Japanese indicator, it's since 9:30 this morning, it's trying to get up steam to the upside, but it's still down 35 ticks or 35, whatever you want to call it, 354.
Sure.
So what I'm getting at is, if I were to ask you, the fact that this thing is trying to move up, might that help boost up the rest of our markets?
The answer is yes. That would be my read on it. You are right. I am a huge proponent of looking at this currency pair, the Euro-Japanese yen, which is on the bottom of my screen right now, as a indicator for what the market wants to do eventually. Inside the Euro-Japanese yen on the bottom of my screen out here, it was actually making a lower low. That was one of the reasons that my clients and I sold our long Russell 2000 position last week, and we went short the market because that and a couple of other patterns, K-Rico, that were out there. Because it said to me that this, along with a few other things, that the market was going to see a move down. Well, we saw that move down on Friday, and that may have been the bottom, quite frankly, out there. It's why I sent out an alert at 3:30 to alert clients that the market was going to go ahead and bounce. And if they wanted to liquidate their short position, that now was the time to do so. And with regard to now, but one of the other competing patterns, and why I don't believe that there is any significant top that was put in, is we've also seen declining bottoms inside of the VIX index out here. Now, anytime that the market has seen any kind of significant pullback, we've seen a rising bottom pattern inside the VIX index. We saw it back here in 2014 in July. We saw it when the markets went ahead and made a top back in September 2014. We saw it when the markets made a top back here in February of 2015. It's not the exact same pattern that we have in place here. So that then means that we actually need to dive down a little bit further into the Euro-Japanese yen to see what it's actually doing as on a shorter term basis. Now, on the shorter term basis here, we actually have coming off of the low back here, like around April 13th. It's actually now starting to form inside the Euro-Japanese yen. That's now the top portion of my screen. It's now trying to form a rising bottoms pattern, whereas our markets over the course of that same time started moving lower. So to me, the Euro-Japanese yen is signaling to us that the market is trying to form a bottom. Was it Friday afternoon? I will know better when we take a look at the end of the day, when I take a look at those price oscillators. You're welcome to stay on through the break if you want, because
I'll hold for sure. And I look forward to the 4 o'clock wrap up what you're going to give.
Okay. All right. K-Rico's going to hold on. He's going to go. He's going to go make breakfast for us. Some nice fruits and vegetables. We'll be right back, folks.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 227. S&P is up 18. Composites up 43. We're on the line with Kay Rico in Costa Rica. And Kay Rico's question, or the part of the conversation we're having, is really the correlation between the Euro-Japanese yen currency pair and our markets here. Now, what I have up on my screen is something similar to what Kay Rico has. I've just made it a little bit easier for you to view on my screen. I just simply have the Euro-Japanese yen on a 1-minute chart. That's the green line. And the bottom chart is the S&P futures contract. And you know, Kay Rico, you know, you're exactly right. And folks, if you pay attention to it, you'll pretty much see a directional correlation. Directional, not like 1 pip equals X number of points inside or ticks inside the ES mini contract out here, but a directional correlation. Now, and you'll see how well it tracks.
We're breaking up, I hope.
I can hear you okay.
I'm watching it right now. I'm sorry if we're breaking up. Can you hear me?
I can hear you just fine. So
Okay.
yeah, so we've established that correlation. Now your question would be what?
Well, I think the way right now at this moment, it looks like we've got the Euro-Japanese is about to come back down a little bit because it's had a real steady climb since 9:30. So if that climb is going to have a little backfill right now, then I'm going to watch the ES and the New York Stock Exchange to see if that gets a little backfill downward, and then make a move to buy the spiders, perhaps. But that's how I'm thinking it. But I caught it, fortunately, early at 9:31 was my first trade, and I was in and out real quick, and I'm very grateful for the profit I made. But now I'm looking for a retrace, and then enter the long position again.
Yeah.
That's only based on the Euro-Japanese. I've got it above my my RSI Wilder. It's above the 80. It's at 81. It might go to 90, but I think at that point I would wait for a retrace down to 70 and then enter a long position on the spiders. Time will tell.
Yeah, no, for sure. Look, the currency pair itself had an opportunity, if it was going to really break lower. It was the March 13th swing point that I had my eye on, because that could have formed a B point of an A to B equals CD to the downside. That currency pair has not done that at this stage. Now, it has neither broken out to the upside either. So it's not like there's any wonderful wild patterns out here inside this currency pair, which is very much like our markets. Our markets, the Dow on Friday versus January 2nd was there was a change of 3 points out there. So we've seen a lot of wild gyrations, but in 3 months and 20 calendar days, was a total of 3 points out there. So yes, I don't use the Euro Japanese yen currency pair necessarily as a tick for tick with regard to how to trade the ES Mini. In the ES Mini, I look for other patterns out there that seem to work a little bit better. So, but I'm not saying don't do that. I'm just saying that I haven't done that. I use that more of a, like you said, more of a guideline as to what's going to happen. Uh-oh, I think we might have lost K. Rico. We lost K. Rico. Well, it was a great question, most certainly, with regard to the currency pair and its influence in the markets out here. Right now, the Dow's up 236, S&P is up 19. Let's go back, and we started taking a look at the ETF structures out here. Let's go take a look at the IWM. We looked at the QQQ series ETF. We looked at that on a daily basis. So, K. Rico's back, I believe.
Yes. Yes.
Okay. Go ahead.
Well, no, I'm good with all we discussed. I just want to tell you, Steve, the Tigers are killing it, man. Are killing it.
He's talking about the Detroit Tigers, folks. Yes, they are.
Huh? How about them Tigers?
How about them Detroit Tigers? I love it. Hey, you got to love bait. Now, you catch all the games down there?
No, I have to really work at it to get. I go on Yahoo Sports every night or every morning.
Okay.
I mean, Miguel Cabrera is batting 426. The Tiger pitching is, who are these guys? No names, are killing it. They're 9-2 or 10-2, and they've got everything on streamline, roll up, and play ball.
That's good. Well, it's early in their season. But hopefully for them, it's long and strong. I'd like to see the Red Wings got smacked down by Tampa Bay on Saturday. So we'll see what they can do on Tuesday. I think their next game is Tuesday, not tonight. But we'll see.
Did you know that the Tigers traded for a guy named Yoenis Cespedes? Have you ever heard of him? Yeah, Cespedes.
Yes.
Because most people probably only know that. They know him from in the last 2 years in the American League All-Star Game, has won the Home Run Derby.
That's right, yes.
And the thing is, he's like a guy that flies under the radar. And yesterday he had 2 home runs, 6 RBIs, and they just powered after him. Oh, my God, I get excited talking about it. I'm sorry.
I love it. We got to have the TFNN Sports Report. Somewhere. Hey, K. Rico, thanks so much for calling in. Have a great day. Enjoy your breakfast, and we'll talk to you soon.
Okay, good talking, man.
All righty. That was K. Rico in none other than Costa Rica. I mentioned the IWM here, and we'll go take a look at it. Now, the IWM, this is a longer-term chart. So when we looked at the QQQ ETF series out there, we were looking at the longer-term chart, meaning going back to March of 2009. I'll put the weekly up here real quickly so that you can see this. So you can see that nice rising price channel. That's the yellow diagonal lines on my chart out here. So you can see that trend is in place. Also, I think that another serious significant low was formed back in 2011, in October of 2011. Like most lows that form during the calendar year, it's typically October that the markets make a low out there. We know that it did that certainly in 2014. Will it do that in 2015? We'll deal with October when we get there. But right now, what we do know is if you come off of that trend line in October of 2011 out here, and interestingly enough, it hits a trend line bottom. That was really the beginning of November, middle of November in 2012 out here. That October lows that we saw here in 2014, guess what? That hit the trend line. Strong trend still in place inside the IWM out here. Price probably gets back and it tests the top of that rising price channel. That's on the weekly. On the daily, though, what took place on Friday was the IWM was pushing lower with some volume. Today, so far, just an inside day. Volume to the downside was 48 million shares on Friday out here. There's a gap that It was also trying to test. That gap was created back here in the trading session of March the 30th out here. Didn't actually get down there, but there were only 20 million shares as price was coming in there. Nonetheless, the gap has held. That becomes an area of support out here. Inside day means the following, folks. Means that the prior trend that price came from will continue. That's got a high probability of doing so. That's why those price oscillators are really important for us to take a look at the end of the trading session. But nonetheless, the rising trend is in place inside the Russell 2000. There's nothing out here that is damages from a longer term standpoint. There's nothing that indicates that the IWM should do anything other than continue to motor on higher and eventually get into the 135 area as the Russell 2000 itself gets into the 1350 range. If we take a look at the SPY out here, we'll do the same thing. The SPY right now, it's priced out at 209.82. It is trying for its most recent swing point from April 15th. That had 99 million shares. It's done 27 million shares in an hour and 15 minutes worth of trading. Seems like it's pushing higher, but it's hard to do the math conversion on a 1 hour time frame out there. At least my mind, it's hard to do that conversion. But nonetheless, do the same thing out here. Put the weekly chart just so you've got the longer term picture. You've got the entire picture here inside of the SPYs. If we come back into 2009, here's your rising price channel. Looks like I did this on the monthly time frame versus the weekly. Nonetheless, doesn't really matter. There's your rising price channel. There's the top of that price channel that has acted as resistance. Here's your trend line, same trend line coming off of October of 2011. Your next touch point out here happens to be November 12th, 2012, the week that began. You can see how strong that trend is. When price came down back in October 2014, came right down to the trend line. That level held, still in a very strong uptrend out here. That's in the case of the SPYs. No reason for it not to do what it's supposed to do and get into the 234-ish type area. 2350 is the 2350, 2450 happens to be the consolidated breakout price projection, the measured move inside of the SPYs. If we take a look at the diamonds out here, the Dow Diamonds are up $2.29, 2 million shares so far. That's pretty good volume. If we take a look at the Dow Diamonds, well, here's the weekly. Then we'll go back and take a look at the daily. You can see the nice rising price channel from March of 2009 out here. Same thing coming off of the low in 2011 as our trend line, and then the low back here, November 2012. That hit nothing but the trend line in October of 2014. Huge trend line out here, huge channel line. Price is still moving higher. The expectation is that price will continue to move higher out here, even though for this year we've seen just simply basically no movement whatsoever. We are in a very favorable seasonal time period out here. And price ought to motor on to the upside, but not until we see price break the trend line, at least, for goodness sakes, which right now is down around the 170-ish type area. You know, is there really any cause of concern? That doesn't mean we're not going to see ups and downs out here, because we most certainly are. But what we can see by taking a look at the ETF structures and looking at it, remember, whenever you're trading, if you're looking at a daily chart, make sure you go back and take a look at weekly. You take a look at monthly. I see Fletch in the Den says it all comes down to free money. It all comes down to money flow, no question about that. And from a technical trader's perspective, we just simply take a look at patterns, trends, things of that sort, tools like we have looked at here. And I think if you keep it simple and you just look at those things, then it makes it a little bit easier to understand what the markets are doing. Not the reasons why so much, but what the markets are actually doing. And as you can see here, these trends are in place, and until those trends get broken, anyways, that's my take on what as I take a look at the overall trends of the markets out here. Now, have a question here. It says, will I look at the GDX? It's pulling back on light volume. Absolutely. Let's go take a look at the GDX out here. That is the Gold Vector Miners ETF structure, which follows gold. Now, gold is back $11 this morning. We're going to do two things. In order to look at one, we really need to take a look at the other because of their correlation. Now, what I want to do is look in on gold here. In gold here, 1189.40 is going to be the key level right now. That's this little yellow squiggly line going across my screen. We have seen gold. Somebody's got their thumb pressed on gold. Maybe it's not somebody, but somehow a group of traders have their thumb on gold. If we take a look at opens and closes over the course of like the last week or so, they're all in basically a fairly narrow range. They're in the range between 1193 to a close of about 1204, so about a $9 range out here. The key level, in my opinion, inside of gold is going to be this the exact number 1189.30 as we speak right now. Not that it can't be tested, but if it gets tested and closes below it, and it says, hey, price will certainly get down to 1179, which is a swing point out there. But what it'll be saying to me is that any momentum to the upside has been lost inside of Goldilocks. That doesn't mean that it doesn't go make an A to B equals CD, I think, which takes you down to about the 1170-ish type area out here. But it would not be a good thing for gold to close below that 1189 area. Now, directionally speaking, these two track each other really well. So now as we go back, we take a look at the GDX, get a feel for what it is doing out here. Let's change this to a daily time frame. On the daily time frame, we're seeing volume of about 7 million shares, it looks like, today. So 7 million shares. This still has, so this is kind of a complex A to B equals CD structure inside of the GDX. The swing point on it, which is the trading session of March 25th, the high there was 1991. Volume was 32 million shares. The GDX closed above with 45 million shares on April the 15th. So you have a confirmed A to B equals CD to the upside that says price takes you to $20.78 out there. That is the pattern. The pullback and actually achieved a higher high with 36 million shares on April the 16th. And then Friday, the pullback was with lighter volume, 25 million shares. Just as initials SNP in our Tiger's Den has indicated. In today's volume, 7 million shares to the downside out here. But here's the deal. Let me see if I can go find this chart out here. Just as we were taking a look at correlating patterns between the euro and other things out here, if I can find my GDX chart, which I will. It's really right in front of me. The problem is I don't see it. Maybe is it this chart right here? Let me see. Is that it? Yeah, it is. Now, it's one of them. It's not necessarily the one that I was looking for, but it is one nonetheless. You can see, this is looking at the candlesticks out here. Excuse me. You can see the directional movement between these two. You'd almost think if you're trading one, you're trading the other. I think it's more gold that influences what goes on in the gold vectors, gold miners ETF out there. And so, you know, that's why I'm using, that's why I like to look at gold to see what it is doing. So I hope that that answers your questions. And with regard to my thoughts, if you see gold close below that, the GDX are going to take on more pressure. That basically is my thoughts. Right now, we've got the Dow is up 219, S&P up 18, composite up 44 points. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 226 points. That's up 22 as well, but 226 points. S&P is up 18, Composite up 46, Russell's up 9, DAX up 192 points. So what's likely to happen today? You know, at this stage, let's take a look at back to my 30-minute chart out here for the ES minute. We got 6 minutes left. If this high out here from the previous bar coming in at 10:30, that's at 2094.25. It's only 1 point above where we're at right now. If that level holds, then what we're likely to, that'll give us our 6th wave out there. Then what we're likely to see is some type of 7th wave pattern unfold. Now, even if it gets above it in the next 4 minutes or so, that does then just, you know, that 6th wave just extends over. I expect we're going to see at least a 7th wave out there. And we'll see if that 7th wave. My suspicion is, and this is a little bit different than K. Rico's view on buying the SPY out here. I would be waiting for a confirmation. That confirmation before I buy the SPY, even though you'd like to buy it at a discount, would be to close above 2099.25 inside the ES Mini out here. Otherwise, I think that we're more likely going to get to a 7th wave, and whenever that occurs, we get a confirmation. If that's occurring below this line out here, that 2099.25, that's probably where we start to see the market start to move down. Now, is the market going to move down and make it a B to a C, an A to B equals C? I don't know the answer to that. I do know the market is still scheduled to make a bottom this week. You know, it could have been Friday out there. So I use those as a guideline, as kind of my triptych out here. But my suspicion right now for the day is that we see another, flurry higher. If we don't see it close above that level and we see the market pull back, that's where then we have to fall back to what's going on inside what's going on underneath the covers. In the New York Stock Exchange, is the summation index back below zero? If it is, it tells us that the sellers are still in control. Yeah, we had an island reversal pattern. In essence, it's failed out here because price got in and closed that gap, but there's nothing more bullish than a failed bearish pattern. But inside these island reversals, it's really when you get a close above the top of them, island reversal tops and or the bottoms out here. Nonetheless, it's already signaled to us that follow through from Friday does not exist out there, and that's never a good sign. My system here seems to have frozen just a bit, just with a minute to go before the break. So, that's a good thing. So, stay tuned today, folks. Basel is... Basel will be up after Basel. It's Monday, so we got Larry Pesavento. After Larry, we've got, I think we got Daryl Martin and David White. And then I'll be filling in. I'll step in and fill in for Tom from 3 to 5 today. So if you want to understand where those price oscillators are at, which I believe that you do, because if they're back above zero, boy, the message is not to be short. There may be a couple signals that say, okay, maybe you can, but it gets pretty risky out there. So, okay, my system is back up. Otherwise, I was going to have to stretch it out and maybe tell you, see if I can come up with a funny joke out there. I really should have, off to the side, I should have a series of clean jokes out there that I could tell just in case, I have a system that goes down, but I'm able to stay up and speak. But, all the summation indexes right now, by the way, they're all above zero, albeit just slightly above zero, but it's really going to be the end of the day for us to take a look at out here. Yeah, system is just still slowing down out here. So, folks, thanks so much for joining us on Magnificent Monday. Stay tuned. Great lineup. Our man Basil Chapman. Let's go ride the waves out there, because that's always a fun thing to do. So have a great Monday. Hey, I'll see you at about 3 o'clock. So join me as I fill in for Tom today from 3 to 5. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.